Have you ever stopped to wonder how trillions of dollars just poof, move across the globe every single day? It really does feel like magic, right? Funding everything from that gadget you bought online to massive international business deals? Well, it's not magic. It's actually a powerful and, for the most part, totally invisible system that keeps the world's economy humming.
That's right. Behind pretty much every single international money transfer is one critical network. A network that connects thousands of banks, yet most of us have never even heard its name. So today, we're going to pull back the curtain.
And the scale we're talking about here is just mind-boggling. Over 11,000 financial institutions. We're talking banks, investment firms, you name it, all across more than 200 countries. It's the true backbone of global finance. And its name? SWIFT.
So what exactly is SWIFT? Well, probably the easiest way to wrap your head around it is to think of it as the WhatsApp of banking. And honestly, that analogy is way more accurate than you might think.
Okay, so SWIFT stands for the Society for Worldwide Interbank Financial Telecommunication. I know, it's a mouthful. But the key thing to know is that it was founded way back in 1973 with its headquarters in Belgium. Its whole purpose was to create one secure, standardized way for banks all over the world to talk to each other.
Because before SWIFT, things were kind of a mess. I mean, banks were relying on these old-school telex systems. They were slow, full of errors, and definitely not secure. There was no common language. SWIFT came in and completely changed the game. It created a universal, standardized, and super secure channel for financial messages. It was a huge leap forward.
And this right here, this is the most important thing you need to understand about SWIFT. It doesn't actually move money. Not a single dollar, euro, or yen actually travels through its network. Just like WhatsApp, it just sends messages. The only difference is, these are incredibly secure, standardized messages that contain the instructions for moving money.
Okay, so that's the theory. But how does it actually work in practice? Let's follow the journey of a single SWIFT message to really see how it makes a global transfer happen.
All right, imagine you're in Ethiopia, and you want to send some money to a friend over in Germany. First, you go to your local bank. Now, that bank doesn't, stick cash in an envelope. Instead, it creates and sends a secure SWIFT message to a partner bank in Germany. This message has all the crucial details: who you are, who your friend is, their bank info, and exactly how much to transfer. The German bank gets those instructions and then, and only then, credits your friend's account. The actual money gets sorted out between the banks later, all because of that initial SWIFT message.
So this really lays out the whole division of labor pretty clearly. SWIFT's only job, its entire purpose, is to send the instructions. The banks, they're the ones that actually hold the money and settle the transactions between themselves. It's a simple but absolutely crucial distinction. SWIFT is the messenger, and the banks are the movers.
But, and this is a huge but, this story isn't just about technology and making things efficient. Because when you control the world's main financial messaging system, you suddenly hold an incredible amount of power. And SWIFT has turned out to be an unexpectedly potent financial weapon.
And that brings up a really important question. Is this thing just a neutral piece of financial plumbing? As we've seen from major global events, the answer to that is a hard no.
You see, getting cut off from SWIFT is one of the most severe financial punishments a country can face. When Russia faced sanctions, for example, it was pretty much locked out of the global financial system. Suddenly, its ability to trade, to attract investment, to just manage its economy, it was all massively disrupted. The messenger system suddenly revealed itself as the gatekeeper to the entire global economy. Now, this massive concentration of power hasn't exactly gone unnoticed. So, in response, nations all around the world are now actively looking into what the future of global money might look like, a future that might not rely so heavily on SWIFT.
We're starting to see the rise of these regional alternatives, each designed to reduce reliance on the Western-influenced SWIFT system. Russia has developed its own version called SPFS, and China has its own system called CIPS. And on top of all that, you have this whole new world of central bank digital currencies, or CBDCs, which could totally change how cross-border payments work from the ground up.
But here's the thing. While these alternatives are definitely growing, SWIFT's dominance isn't going to disappear overnight. It's got this massive head start, built on decades of global trust, nearly universal adoption by banks, and an incredibly robust and secure infrastructure. A network is only as powerful as the number of people on it, and right now, pretty much everyone is still on SWIFT.
And that really brings us to the ultimate takeaway here. This story of SWIFT teaches us that the systems that move
information are just as important as the systems that move money. Control over these networks isn't just some technical detail, it's about real power, geopolitical influence, and the very structure of the global economy. So the next time you buy something online from another country or hear about sanctions on the news, remember the invisible messenger making it all happen.